In this video, I'll be going over two trades I've taken this week, one on Tuesday and the other today. I'll be doing my best to post more and more trade recaps to help you guys, as I know a lot of you are struggling with the framework for your trades and your daily buys. And so I'll start with the trade on Tuesday. So immediately, you can see that we're trading within a range, okay, and consolidating inside of it. Okay, so we already have this range that I'm consolidating within. So we draw it out on NQNES also, with this consolidation within a range. And what can we expect when we trade into one side of a range and manipulate it? We can expect the other side of the range to be targeted. Okay, and you can see that we have this on YM. We have this range low to range high, and we'll go over why I took along on YM and not ES or NQ. So at 6 a.m., you'll see that YM expands lower into this range low and then immediately it expands higher again, showing that sign of reversal. And at the same time, we also have this daily cycle sequential SMT here, with YM taking the London low, but ES and NQ both failing to take this London low at the time. Okay, and we begin to trade higher from there. So with this daily cycle sequential SMT, you would expect the assets that make the failure swing to trade to the range high. But as you can see, that was not the scenario. So it's very important we know which assets to be trading. Okay, so we already are aware of where the daily candle is likely to trade to. Okay, we have this range high. And so what we can do is we compare it with our daily profiles. So if we draw the opening price of the day, you can see that we open lower into the range low, form a low that we can trade away from and expand. Okay, so we open low, and then for a bullish candle, we want to see high, close. So open low, high, and close. And so we have this expansion higher, and on YM we leave this fair value gap at 7 a.m. But on NQ and ES we fail to form that fair value gap, and that shows that YM is most likely to expand higher and trade to the range high. So after expansion, what can we anticipate? Consolidation or retracement. And although it is simple, we buy lows and we sell highs. So after we expand, we look for a retracement to a gap that we've left behind, which would be this 1 hour fair value gap on YM. Okay, so it's important not to have FOMO here and think we're going to run away. We must wait for a retracement or some sort of consolidation and manipulation to continue trading higher. Okay, so if we go to the 15-minute time frame here, you'll see that 9:30 expands lower to this 1 hour fair value gap, and YM immediately trades higher. And at the same time, we have NQ and ES given this 90-minute cycle sequential SMT, taking the 6 a.m. lows with YM failing to, and this gives us some sort of SMT, okay, so that YM can expand higher. If we have a look at the 9:15 candle here, you can see we have a down close candle on YM, and both NQ and ES we have an up close candle, and so that is our precision candle, and I have gone over that and what that is in a previous YouTube video. And so now I'll give you some insight into my model. We see this 15-minute precision candle, and so on the candle following that, so 9:30 to 9:45, we can look at the 1 minute time frame and look for a change in the state of delivery. And we know that YM is the most desirable asset to trade. Okay, so we'll be looking for a 1 minute change in the state of delivery on YM. Okay, so we have this expansion away from the 1 hour fair value gap, and we're looking for a close above a down close candle. So this 9:34 down close candle gets closed above, and you can either wait for us to trade back into it or enter immediately, which is what I did. with our stop under the most recent swing low, or one tick below if you want. Okay. Targeting, of course, the range high, which we have here. And so this is the trade that I took on Tuesday on YM. This 4-hour trade. Okay. So after we expand, we anticipate consolidation or retracement. Okay, and we retrace back into this 1-hour gap, expand away, and we can look for a change in the state of delivery targeting our drawn liquidity, which is the range high, after expanding away from the range low. Okay? So it's very important to understand which assets to trade, as well as which direction. It's just as important, and I highly recommend not just sticking to trading a single asset only. I really would put the time in to get good at picking the right asset, as it really does make a difference. And of course, after we trade into the range high, you can frame lower prices on NQ and ES, which you see we have this expansion away, which is completely fine to trade. I just prefer to trade YM to the range high, as it seemed more logical to me. So it's important to note that it's not just the asset that gives a failure swing that's going to expand further. You need to be paying attention to what happens after the manipulation and which asset is showing the most willingness to expand and which is showing the most strength. So that is trade 1. And we'll go into the second trade, which was today on Friday. So first, let's get on to the weekly time frame. If we want to see continuation of the previous week on YM higher to these highs over here, you would want to see an open low, because what do bullish candles do? They open low first and then trade higher. So open low, high close. So if we open low, we want to open low into some sort of key level, being this fair value gap we have here. So we'd expect this daily fair value gap to be the low of the week for YM. You can see on Thursday we trade into it, expand away, forming the low of the week. So if we go into the 4-hour time frame now, you'll see that we have exactly what we just had on the first example of the trade I took. We have a range, and we are consolidating within the range. We manipulate one side of the range, expand away. Okay, and you can immediately assume that the range high or previous week high will become the target, and it makes sense aligning with the higher time frame candles. The weekly candle opens low into a key level, and we expand higher, making a bullish candle. What we can also do to help frame this is look at how the daily candle forms, as that is the candle that we are trading as intraday traders. We mark out the opening price of the day. What do? We open low. So if we draw it out on all the assets. We open low, and we trade into the previous day low on both NQ and ES. We failed to on YM, giving us this weekly cycle sequential SMT, forming the low of the day in London, and we expand immediately straight after, adding context to our bullish narrative that we've already determined using the range low and range high and the weekly candle. Okay, and we also end up having these 4-hour and 1-hour changes in the state of delivery, okay, confirming this. Now, after we expand, as I said in the previous example, we don't buy high, we buy low, so we have to wait for a consolidation, okay, or a retracement. And what can we retrace into? A gap left behind. Now, immediately after seeing us trade into this 1-hour gap on YM and ES, failing to an NQ, shows that NQ may be the most likely to expand away. Okay, but we cannot pattern trade this and pattern trade failure swings. So at 8 a.m., YM and ES both give up close candles on the 1-hour chart, whereas NQ gives us this down closed candle. And so this is a precision candle once again. And so if we apply what I said in the previous video, or the previous example, sorry, we can assume that we're going to be looking for a change in the state of delivery on the next 1 hour candle. And so we'll be using the time frame alignment of 1 hour to 5 minutes. So we'll be looking for a 5-minute change in the state of delivery on one of the assets to trade higher. And on YM we already know where we're likely to trade to. However, if we go even deeper into this, although we said NQ is most likely to expand as we have this failure swing on the 1 hour gap, you will see that at 9 AM, with this 9 o'clock candle trading below this 8:55 candle, that gives us a 90-minute cycle sequential SMT, and we have these failure swings on YM here. There we go. And so this is a switch in strength, okay, on NQ to make it the least likely to expand. And you can see it is NQ that trades lower at 9:30 back into this 1 hour gap. And when we break this SMT is when there's the signal for the other assets to expand higher. And so given we have the context of the range high and range low, the weekly candle on YM trading into this daily fair value gap, and we close above this down close candle here on the 5-minute chart after the 1 hour precision candle, I can enter a long here when we close above and put my stop loss at the most recent swing low or 1 tick below. Okay, that's up to you. And what do we target? We target the range high that we had pointed out. Okay. And so this is a 17-hour trade. However, due to my own psychological barriers, I ended up closing a lot earlier than I should have been closing, and it turned into about a 6-hour trade. And so yes, it is very painful to see all of this be lost, but that is all I need, and I can't complain about this. So this is the trade I took. Okay, using daily profiles, the context of the weekly candle, the context of this range low, range high, SMT, okay, and choosing the right asset to trade. Okay, so hopefully this clears up some ambiguity about which asset to trade, when to trade, NQ, ES, or YM. Okay, because we typically are told never trade YM. It does its own thing. But it does its own thing in the right context, so it's important to understand context and what highs and lows we can trade away from and not expect to be taken. Okay, so I hope this made sense. If you want to continue seeing trade recaps from me, let me know in the comments. And if you want access to ask me questions and see some occasional analysis I'm posting, go to the link in the description to Triad, where you can access me and a large community of other traders.